Good morning, good afternoon, and good evening. Welcome to today's episode, What Defines a Modern Banking Experience? This webcast is part of global thought leadership program, Rethinking, produced by Thought Machine. With these Rethinking webcasts, we often bring to you industry leaders from around the world who come from very diverse professional backgrounds. Together with them, we explore topical issues facing today's industry in financial services. I'm Robin Zhang, Global Marketing Director at Thought Machine, and it's my honor to serve as your moderator for today's session. Before I start, I'd like to go through a few housekeeping items. We will be taking questions throughout the webcast, and please use the Q&A window on your online dashboard. We will do our very best to answer all of your questions. In any event we run out of time, we will follow up accordingly. And today's session will be recorded. The replay will be available on Rethinking website, thoughtmachine.net/rethinking. This is also the website you will find scheduled for upcoming webcasts, as well as other interesting thought leadership assets. Finally, at the end of the webcast, there will be a very brief survey for us to gather your feedback. And we'd very much appreciate if you can provide some comments because they are very important to us as we continue to improve and strive to bring to you thought-provoking materials in the future. Now, without further ado, I'd like to introduce today's panel. Dharmesh Mistry, CEO from AskHomey, and Sairam Rangachari, CTO and co-founder at Tandym. Barry O'Connell, Managing Director at Thought Machine. And I'd like to go around and ask each of the panelists to provide a very brief self-introduction. Dharmesh, if you don't mind, can I start with you?
Sure, of course you can. And look, it's a great pleasure to be here. Thank you for inviting me. I'm Dharmesh Mistry. I've spent 30 years working with banks and technology. And I decided to come out of that space and go into the prop tech space with AskHomey, which is a platform for managing your home. There will be a pivot at some point towards financial services because we feel that banks focus on money and transactions, and we want to focus on the 80% of non-discretionary spend that everyone has, which is to do with their home, whether you're renting or mortgaging. Then 80% of your cost is to do with your home. And we're looking to help people manage that spend and save, on the cost of keeping a roof over their head.
Thank you. Sairam?
Very nice to meet you all, and thank you for having me. My name is Sairam Rangachari. I have spent a number of years with banks and payments. I used to run digital engineering for Capital One, ran payments, API and open banking for JP Morgan. I was the head of the products for the banking sector at FIS. And most recently took the entrepreneurial plunge with Tandym, along with two amazing co-founders. Tandym is a merchant branded credit card that enables a private label credit card for merchants of any size. As we talk about embedded finance, I'm eager to use Tandym as one of the examples there.
Great, can't wait for that. Barry?
Thanks, Robin, and thanks Dharmesh and Sairam for joining Thought Machine at this important webcast today. My name is Barry O'Connell. I lead up Thought Machine's commercial business in Americas, which covers US, Canada, and Latin America. I joined in January. Extremely passionate about helping banks transform their legacy technology to serve customers better. So delighted to be part of this webinar today.
Great. Thank you, Dharmesh. Thank you, Sairam. And thank you, Barry. We're very excited to have you. I can't really wait to get it started. Today's episode is part of a mini-series that focuses on modern banking experience. Last month, we spent a lot of time talking about real-time data and its impact on delivering modern banking experience. For today's session, we're going to focus on the trends of open banking, open finance, and embedded finance. The words that are often referenced in a context of banking modernization. As a marketer, I often ask myself, are they buzzwords? or are they truly the industry trends that we need to focus on? And what do they mean for modern banking experience? So I'm so glad I have these amazing panel of industry leaders to share with us their thoughts. So with these questions in mind, I'm going to start with Dharmesh and Sairam. Both of you have been working, as you have mentioned in your self-intro, in the industry, financial services for a long time, and come from a variety of roles, technology to operations to strategy, and now today as business owners. And Dharmesh, you talk about how you started Homey over 2 years ago, and Sairam, you founded Tandym last year. While they're different businesses, from what I have learned from you just that short amount of time, it's clear to me that they share a common goal, that is to deliver groundbreaking and exceptional modern customer experience for today's modern day home buyers and one for merchants who are looking to increase their loyalty customer base. So I'd like to start with you, maybe Dharmesh first with you is, what can you share with us more? What are the drivers behind how you wanted to start your current business? What drove you to where you're doing today? And what is that unique customer experience that your business is aspiring to deliver?
Cool. So round about, I guess, 2013, I was asked to produce a digital strategy for my previous employer, which was Temenos, a core banking software company as well. And when I was doing the digital strategy, we kind of looked at, or I looked at, how other industries were trending. And basically, we looked at, if you look at any industry like retail, telecoms, travel, etc., then manufacturing and distribution are separated. The people producing the product aren't necessarily the ones that are selling it to the customer. And, in that separation, what we're seeing is that the manufacturer of the product typically goes into a scale game. These are producing high volume products at the lowest cost possible. And the distribution players tend to find niche customer segments, specialize around those segments, and provide the same products, right? So, you've got, in the banking world, you'll have a bank that produces accounts and loans, etc., and you'll have another organization that typically will distribute those. So I saw that kind of as a possible trend. And when I was reading the white paper on open banking, we kind of identified that this would be the trigger to accelerate that separation between manufacturing and distribution. And when I looked at this, I said, well, look, the most exciting play, and my background, for 20 years has been putting banks online. The most exciting space is this distribution space. I used to give examples of a landlord. I'm a landlord. My bank just gives me an account and a mortgage to buy my investment property. And what I'd really like is for the bank to manage the investment property in a way that, it'll tell me when rent hasn't come in on time, it'll separate my expenses between income and capital, help me with my tax returns, right? So do more than just the transaction. And that, is what I would call a modern banking experience. It's not about the transactions, it's about the experience of being a landlord. And when I looked at the opportunities for this, what I called experience-driven banking or a modern banking experience, I said the biggest asset class is the home. And actually, as a homeowner, the bank just gives me an account and a mortgage, right? And what I'd really like them to do is to help me manage my non-discretionary spend, my bills, my insurance and stuff like that, help me to get deals and save money in that space, right? Because that is the majority of my spend. Banks weren't doing that. That's why we launched AskHomey.
Thank you, Dharmesh. I feel like there's a lot I can learn from you because I personally just went through that experience, have to patch everything together. But with the interest of time, I'm going to pass it to Sairam.
Thank you, Robin. I agree with everything Dharmesh said. I think the key word and the operative word is the experience. And as we kind of drill down, and I'll talk about like the thesis for Tandym in just a second, as we drill down, it really comes down to like, who are your customers and what are their needs? what is the value you can create for them, and where do you meet them? I think like in a loose way, that combined creates that experience that we want to create for the customers. So as we thought about Tandym, we jokingly call this internally, like private label credit cards is one of the OGs of embedded finance, where like banking product was distributed through retailers. I believe Sears pioneered this a long time back to say, hey, I'm a retailer, customers are shopping with me, how do I fund it? Let me combine this with the banking product. But we really thought it hasn't evolved in a long time. So we wanted to take a stab at, how do you create that in the modern way in 2021? And we really took a couple of things. Merchants love accepting credit cards because it makes it super easy for customers, but they pay huge interchange and processing costs in return. So we really wanted to go and disrupt and say, hey, how do we create an experience where merchants can launch their own branded credit card in a matter of hours and days that offers credit to their customers? It saves them 80% plus, approximately 80% on processing costs. And we take the cost savings and fund rewards for their customers to come back and shop with the same merchant over and over again, right? So every single time the customer shops, they A, get credit, and B, get rewards. So they have an incentive to come back and help that merchant. So we really said, hey, if they're taking a branded credit card, we can really align, we can disrupt a couple of these fundamental things and really align to the growth of the merchant. And that, for us, was the thesis for Tandym. But going back to Dharmesh's point, I think going back to the definition of modern banking experience, it's really about creating value, solving needs for the customers. In our case, it's both the merchants and their end customers, and meeting them where they are, which is on their checkout screen and on the merchant website, versus a very disjointed, hey, you're checking out, let me take you to this other website, make you spend 2, 3, 5 minutes to open up a credit card. And by the way, you no longer remember what you were doing at the merchant website. So we are solving for all of that.
This is great, thank you. Now, Barry, from what we have heard from Dharmesh and Sairam, I'd like to come to you because you have been consulting with financial services clients for nearly 2 decades, and most recently focused on digital strategy. Can you share with us, in that consultative experience, what's your observation in terms of how customer experience has evolved over the years, and why do you think it's such a critical priority now for banks around the world? I say that because just about any banking related or financial services related surveys you read, it's always customer experience, customer satisfaction. Right. So now, Barry, I'm going to turn to you.
Sure. Well, I think there's the adage that, your last great experience with a merchant or anywhere sets the minimum expectation for your next experience, and that's across any type of experience, not just financial services. So customer experience is definitely the current battleground for all services. But a lot of that in the context of financial services is limited by the bank's ability to innovate on product, especially. The buy now, pay later drive was really driven by fintechs, such as Klarna, Affirm, Afterpay, and they launched relatively quickly and took massive market share. And the reason why banks couldn't enable that experience at a point of sale where you get an installment loan at the point of sale immediately is because it's quite complicated to offer that, and it's very complicated for a bank to build that. Actually, it's a more complex product than you think. So it's imperative banks, now that they've invested, I think, in pretty decent digital mobile experiences, to tackle the underlying problem, which is that their legacy platforms and code can't adapt to truly enable differentiated customer experience. So that wave of foundational investment in the core is really underway. We kind of refer that to sort of the platform era of banking, and the next sort of wave of investment, which is paramount to enabling things like buy now, pay later innovation in the market.
Great, thank you. Now, with that backdrop, we talk about from each of our speakers, different perspective. What's your take on the modern banking experience or modern customer experience? So I'm going to turn to really the meat of the discussion today, talking about what is open banking, open finance, and embedded finance, and through really real-world case studies, experiences from our speakers. So Dharmesh, I'm going to start with you again. I have become a quite loyal reader of your blog posts and really enjoying them. I especially enjoyed your recent blog about open banking. So just to help us level set about a little bit, can you help us to define what is open banking, open finance? Are we talking about the same thing, or and also how are they related to what we're here today to talk about modern banking experience?
Yeah, sure. I mean, thank you, and thank you for reading my blog. So, really appreciate that. Yeah, as I said earlier on, open banking, started. I guess the white paper started 2013, and it was brought in to create innovation because the market had kind of stagnated around the big banks, and so it was to drive innovation and competition in the market, right? And really, it was focused on banking products, so account-based products. And so banks were mandated with providing access to statement data for those products. So whether it's a current account, a deposit account, a loan account, and that was its limits, really. There was one other aspect in Europe around initiation of payments. So a third party could initiate an account-to-account transfer. But that was the only action. So that was the limit of open banking. Open finance takes it to a whole broader remit. And as we know, most of us have at least half a dozen other relationships for things like our insurance, for our investments, for our pensions, et cetera, right? So what open finance does is open out this data in a similar way to what open banking did for account-based products, but for other broader products. It'll still follow the same permission-based model. So it's not just free access to anybody, but obviously the customer themselves has to give permission to provide access. But it will, this kind of thing will, like we've seen with innovation from the fintechs based on open banking, we'll see a much bigger spectrum of innovation based on a broader set of products.
Thank you, Dharmesh. Talking about innovation, right? Sairam, I'm going to turn to you. I know financial inclusion is a topic dear to your heart, something you're very passionate about. Is this one area that can also benefit greatly from open finance?
Absolutely. I first of all, like Dharmesh, given Robin's raving review of your blog post, sounds like I should also start reading. So. He did a great job on defining some of these things, like these terms. There's also a couple more terms I'll throw in there: banking as a service, as well as embedded fintech and all that stuff. Robin, before I go into answering your question around financial inclusion, I think I've been part of panels for the last few years helping define these terms, and yes, there are better definitions, slightly worse definitions. Dharmesh did a great job. But it's to me, the real question is, what do you do with this, right? So if you were a bank and all the other things, and I kind of put them in three big buckets of value drivers and what do you use where. So there is a whole bunch of infrastructural inefficiencies, things like open banking rails, things like real-time payments, things like other things can solve for. And then you've got a whole bunch of as an existing bank or a financial institution, you have a whole lot of customers. Now, are you able to innovate and bring all the innovations by yourself? If your customers want to do crypto trading, are you able to go build it? If not, can you go embed a fintech to offer that? I call it loosely the embedded fintech side of things. And then you have a whole host of customers that you're not reaching today or you're not creating value for directly. And that's where things like embedded finance can help, where you as a banking as a service provider, you could enable other players, right? Like in the case of private label credit card, you're enabling merchants and retailers to go take that offering at the point of need for the customers. So that's a great example of embedded finance. But going back to your question on financial inclusion, we've seen and know this historically, private label credit cards are one of the very early, people with a thin credit file. So it's been one of the instruments that have been key for financial inclusion. Obviously, you have a whole host of fintechs today trying to innovate on open banking because they're saying, hey, if you don't have a credit file, connect your bank account, and we're able to underwrite you that way and offer you some credit products and lending products, things that were not easily accessible even like 10, 15 years back. So I think all these tools are really becoming key drivers for financial inclusion, where we're no longer looking at like how thick your credit file is and all that stuff. If you're a gig economy worker, there are a whole host of fintechs that are looking at saying, let me just look at your payroll data. Let me just look at your banking data. Let me just look at your other aspects beyond your credit score so we can better serve you. You know, whether it's on student loans, whether it's on financing purchases, whether it's even on mortgages. So these tools, these concepts, open banking, embedded fintechs, embedded finance, banking as a service, open finance, they are all becoming very, very instrumental in driving financial inclusion, because it's no longer one size fits all. It's no longer just like, hey, do you have a great credit score? If so, you get great products, great banking and financial products. Now you've got a whole slew of dimensions to look at people with, and that's really driving financial inclusion as well.
That's really interesting. I think what you said, especially in the last, about the nothing is going to be solely dependent on a credit score. That, to me, that's just itself, it can be life-changing, or it can be a really amazing disruptor for the business, for the industry as a whole. Now,
and if I can quickly add, I'm sorry, I came in to the U.S. as a student, and obviously when I came in, my credit score was not the one that banks were hungry for to offer me, financial products. I had to go build up my credit score. So the only products that were available to me was a secured credit card or a student credit card. And literally, as a student with like $500 in savings, if I'm going to use that to secure my credit card, my cash flow is severely hurt. I am glad to see today that's not the case, and I'm pretty sure in 5 to 10 years, it's going to be even more exciting.
That's great.
It's a good example, your own personal experience, Sairam, because, if you look at it, what's happened with fintech based on open banking is that you can build up your credit score as a student with certain products. You can build up your credit as a renter for your mortgage later on, because that was a gap. Now refugees don't have an address, but they can still build up credit history, right? So there are all these sub-segments that really weren't served by banks, but niche propositions, look broader, and they kind of leveraged open banking to reach these audiences, and I think it's just fantastic.
That's great. So now, Barry, we talk from Dharmesh and Sairam. We're obviously with open finance, there's so many things to do. I almost feel like the sky's the limit. Can you help us from the core, from the infrastructure standpoint? Is it even possible to deliver the open finance with the legacy cores? Or maybe to put it differently, how do modern core banking systems enable or facilitate open finance?
Well, you're right. The innovation that Dharmesh and Sairam just described is kind of being enabled at the fringes of the banking ecosystem. And so the reason for that, one of the big reasons, is the legacy technology that these banks run on are almost 40-year-old. They're batch-based. They're not open. The code is often very, very old, and there's very little talent in the bank even knows how to customize it. So open banking has really allowed for a whole new ecosystem of players to come in and serve these new customers and new segments in new places, which is very good, right? It gives access to finance to many millions of people in the US and globally who just didn't get access to it before. But we believe that a modern bank core is truly cloud native and cloud agnostic, quite frankly. It needs to be real time, fully microservices based. And the APIs that enable these touch points in new spaces and places like merchants, etc., are all enabled through those 5 principles. One of our bank partners, JPMC, for example, recently opened up 2 fintechs to their 4 million merchant clients to offer them new services to help them grow, run, and fund their businesses. And to do that, you really have to open up your APIs and help other providers connect to your merchants to serve them in new ways. And I think that's kind of the innovation we're seeing by banks who are investing in modern technology and cores.
Okay. Sorry, Robin, can I just add to that?
Sure.
Because it makes a really good point. One of the problems with the legacy systems and why the majority of banks today are multi-core organizations was because their old cores wouldn't allow them to stretch, the capability from just serving accounts like, deposits and credits, savings, to mortgages, right? And because, mortgages had some special features, etc., then they had a separate mortgage system. And then, they had a separate one for credit cards because of the volume of transactions. So they all ended up as multi-core, which, fragments all of the customer data. With a modern core, we know the flexibility required for the range of financial services products, and it should be able to handle all of your products, not just a monoline of products. And that, I think, is one of the biggest, advantages to a modern core today.
Hey,
Great.
I'm sorry, like Barry and Dharmesh made such great points that I'm compelled to add something to it too. But I want to pick on something that Barry said. By the way, I've had front row seats into some of the issues that he's talking about. And I think that building that organizational agility is such a key aspect. We talked about the legacy systems, but there's also the legacy mentality that we need to kind of help the FIs and the banks overcome. Barry used a really interesting word when using the JPMC example. I'm a JPMC alum, so I'm glad he used that example. It's the enabler mentality, right? So I think for the longest time, a lot of these institutions used to say, these are my customers. I need to build the products. They walk in through my doors. They only peek out the outside world through my windows. Versus now, like on top of modernizing these systems, these institutions are beginning to say, hey, how do I best serve my merchants, even if that means I bring in the best value proposition and offer it to my merchants? And I think that's going to be a game changer as well, alongside the transformation that happens at the system level.
Sairam, while you're on this topic, right, I'd like to pivot a little bit to the embedded finance, which you actually already touched upon quite a bit. We talk about openness and then connectedness. You also touch upon JPMC, where I actually read about your post on social media as well. You talk about how you focus on creating and growing an industry-leading digital connectivity experience for corporate and the financial industry client. Can you help us drill into a little bit in this, whether it's your work at JPMC and or just overall your experience so far? What do you mean by connectivity? And is it the same as embedded finance? Or how is it related to the trend of embedded finance you have already, spoken quite a bit about?
Absolutely. Let me come back and hit how I think it's either connected or not connected to embedded finance. But just to give some context, so I ran APIs and open banking for the corporate banking side of things. So most of my clients were on the large corporates and FIs at that level. The one clear trend that we saw that we wanted to capitalize on early on was our customers had needs that we couldn't service in time. So I think one of the ideas that we co-created with the customers is, how do we enable you to go faster versus you going at the speed of us, right? And so we invested quite a bit in the API infrastructure and other things. Of course, like opening it up to the outside world with the corporates, with all the security that needs to happen, was a little bit tougher value proposition because there's KYC, there is custody of data. I think some of the open banking regulations also struggle with some of the security, privacy, who's the weakest link side of things. But the one area that was obvious for us is, hey, customer, you're already our customer. We already have our connections. If you're saying you can go faster, we want to enable you to go faster. So we started building a whole bunch of APIs. I'll give you a couple of examples. Some of our customers wanted to create a real-time treasury, and they were asking for, give us APIs. We don't want to deal with batch-based processing. We want to be able to create our own real-time treasury where we can do the cross-border, trigger a whole bunch of activities inside. That was an easy thing for us to enable. So that we took that use case and we went after that and we said, hey, from a digital connectivity perspective, we can give you a whole host of APIs where you can go create that dream of real-time treasury. And by the way, as you're doing it, we will learn from it and we will take it to our other clients. And then another use case that came up, Robin, was just with the advent of real-time payments and the API, like when you talk about real-time payments, APIs are and real-time payments are a match made in heaven. So we worked with a whole bunch of marketplaces that dealt with gig economy workers, whether it's delivery systems that had to pay their drivers, and they really wanted to incentivize their gig economy workers by offering them real-time payments. So the minute they finish the task, they get paid. So we took a whole bunch of these use cases and we said, okay, like rather than think about this as how we're going to change the world, let's start changing our customers and start enabling our customers by focusing on use case after use case. And that's how we built that up.
Great. Dharmesh, in the 90s, you promoted the concept of franchising banks. Can you share what was your thoughts behind it and how does it compare to embedded finance as people are talking today?
Sure. So the idea was very much because I was in IT and I was developing some of the very first kind of systems that went out that were customer facing as well. And the idea was very much that technology is scalable. So why don't we sell the capability to provide banking kind of services to third parties that had stronger customer relationships, right? And that's what we're seeing today with embedded finance, right? Is that, like I said before, manufacturing and distribution, we're seeing a much bigger growth in distribution plays because you don't have to have a banking license necessarily to leverage banking data and offer a better service, or new services that customers actually want based on their banking data, right? So the big difference was that, franchising banks was much more just about white labeling the bank's existing products and services and just offering banking, right, through a third party's brand. Whereas embedded finance allows you to take either a product, a process, or some data insights even, right? And at a smaller level, embed that into a broader customer journey, right? And that might be just, paying for a transaction in a holiday, or it might be, creating credit history for a renter. It could be, many other things, right? But embedded finance gives the opportunity to a much broader range of providers. So, I think what we've seen with open banking has focused very much on kind of banking experience, but with embedded finance, this will apply to every industry. And if we look at what I think McKinsey's had highlighted, it was that there are 12 industry ecosystems, and banking was one of them. In the next 10 years, it won't be one of them. It'll be embedded in all of the others, right? So pretty much we're going to see that, industries like travel, media, retail, etc., will all need to learn a little bit about, their financial transactions and how they can control the entire customer journey so they're not leaving the financial part to banks. Yeah. Yeah,
thank you. Now, Barry, I think all of you talk quite a bit about modern core banking system, how gives the banks the flexibility, the scalability for both in the context of open finance and embedded finance. And also you all talk quite a bit about the APIs. So can you share with us a little bit, I would imagine having a new core, right? There got to be still a lot of integration work needs to do in terms of even with the APIs. What are the other characteristics of a modern core system that truly facilitate, make it easy? So it's not a years-long project, but it could be, we're talking about weeks or even months. Can you talk that a little bit?
Sure. Yeah, to Dharmesh's point about embedding finance everywhere, that's definitely a trend, right? And to do that, it means, to give you an example, when Stripe offered you to download 2 simple lines of code to accept payments anywhere, it revolutionized how merchants could get paid digitally for a simple fee. So we talked about the tenets of a modern core, being real-time, cloud-native, microservices-based, fully API-enabled. But another key tenet that we believe at Thought Machine, and kind of why Thought Machine was founded, that banks in particular should be able to build and represent products in simple programmable code. We use Python, but we have allowed banks and their engineers, importantly, and the bank product teams to start building real banking products again, very easily in simple code. And that not only supports, the platform can not only support one type of product, like a loan, it needs to support every single financial instrument in the bank. And that's what Vault, Thought Machine's platform, is built upon, that principle that our platform supports all products at the bank. And those products can be embedded anywhere if the bank chooses to place that with a merchant, in a merchant experience or elsewhere. So for us, that's kind of one of the reasons why we're founded, to get banks back to what they're being good at, providing financial services and building simple financial products that are accessible on any channel, on any space or place, quite frankly.
Thanks, Barry. Now, I'd like to pivot the discussion a bit, talking about today's banking value chain. I think we all touched upon, as in the context of delivering modern banking experience, we talk about open finance and embedded finance, and we talk a lot about non-banks entering into the financial services arena, offering services that have historically been dominated by financial services companies, right? And also we talk about banks, on one hand, regardless the bank size, they need help from technologies companies, from fintechs, to create new revenue streams and distribution channels. On the other hand, more and more technology companies are also offering financial services, as we have witnessed with Apple, Amazon, and Uber. So this is where I have a question for almost all the panelists. I'll start with Dharmesh. Again, in the blog, you talk about the big fight, banking versus technology companies. You talked about BaaS, which I think Sairam touched upon earlier a little bit too. Sounds to me it's a double-edged sword. So as a divide between friend and foe blur, between banks and fintechs, what advantages do banks still have, and how do banks navigate this industry, the new industry paradigm per se? Dharmesh, can I start with you?
Yeah, of course you can. So firstly, banking as a service can only be provided by a bank because you need a banking license, right? There are vendors that will talk about banking as a service, for their software platforms, but that's really, if they're only doing things like credit checking, etc., then, that's really software as a service. But when it becomes banking as a service is when you're providing an actual product like a credit card or a deposit account, etc., or you're executing a transaction, because only licensed banks can do that. And certainly they can be sitting in the background, and you can white label that service and offer it as a fintech. But the provider of that is the bank itself, right? So that's an important differentiation, because I think some people as software companies think that they're doing BaaS, but they're not. Now, in terms of the double-edged sword, it is this kind of like a race from two ends, I think. I guess, the market looks at this as there are the incumbent software companies that have, global reach of their customers. They've been established for many years, etc., but they're on legacy tech. And then at the other end, you've actually got the modern technology core vendors, people like Thought Machine, etc., right, that have a modern technology, right, but need to scale and get their customer base, etc. right? Certainly they're doing that. So I see that as a race from two ends. The thing that hasn't been talked about is that, both of these parties are targeting, new players as well as existing players, right? But existing players, some of the bigger banks and smaller banks are becoming BaaS providers, right? And the people that they serve to provide BaaS services could have been licensees of the modern tech providers and the incumbents, right? So that's really the big fight. It's a three-way thing between these kind of three parties. What I would say is that to provide BaaS, a bank itself doesn't have to build that capability. They could just buy a modern core technology and provide that as a service, right? So you don't have, just to do BaaS, you just need the license, and you could just buy the technology. If you read my article that comes out on Friday, there is a case for innovation, which we have yet to see, and it plays very much along the lines of what Barry talked about in terms of programmable products. And there is a point of innovation. I think large banks can do the scale play of, lowest cost per transaction, the commodity kind of current account, deposit accounts as a service. And the niche banks like credit unions can start to do experience-driven banking, like services specialized for new customer segments, like, targeting landlords, targeting homeowners, targeting renters, targeting refugees, immigrants, et cetera, et cetera. And we're already seeing that, especially in the US.
I think, Dharmesh, as Barry, I'm going to actually come to you because Dharmesh already start talking about the BaaS and also the core banking system in terms of enabling BaaS. The question I have for you, Barry, is how is BaaS different from the traditional white labeling of banking services? And what normally does a core system provider like Thought Machine play in this new banking value chain? What kind of role does a core system play in today's world?
Sure. Well, BaaS is a real, in our market, is a very fast emerging trend and kind of a common use case to leverage our platform actually for some of our clients, both big and small, I would say. So definitely BaaS is a way for banks to address and open up new revenue streams and also access new customer segments in new ways. I was speaking to a friend yesterday about how much they love their Apple Card product. And I explained to them, did you know that Goldman Sachs is the bank behind the Apple Card? And it blew their mind. They literally thought the brand was Apple. So even the big guys are well into the BaaS trend. But, also smaller banks. I recall it was Citizens Bank, a pretty large bank, obviously, in the Northeast. But they were also providing the microloans behind when you bought an Apple device at the store. You were getting a microloan to buy that product through Citizens Bank, and they're small bank competing with the big guys. So you're seeing this as a real emerging trend. We're happy to say our platform can support BaaS because, as I said, it's very easily, and we can customize products really easily and create new products. So these banks can suddenly offer new segments like agricultural loans if they want to compete in a new space like that, which is a use case we're working on. So we believe that our technology is flexible enough to allow a bank to sort of experiment, develop POCs and MVPs in new areas like that without having to tackle their legacy code initially. So we're seeing banks start building a BaaS product on Vault, offering that to a new segment without having to rip and replace their current code and infrastructure, and depending on that success, migrate old accounts over to that new instance or new core over time, which is obviously a lot less risky. So you're addressing both the source of new revenues while experimenting with new technology and scaling it, which we think is a very safe way to modernize and develop new products at the same time for your customer base and new customers.
That's an interesting tidbit about the Apple Card. I actually just recently started using it with my teenager at home, and it's been very helpful for me to control his finance. Sairam, I hope I'm not asking putting you on a spot, but I do have a question for you. When you were talking about Tandym, what you aspire to deliver in terms of modern, financial services experience, how do you view banks? do you view them as partners or competitors? Because one way you're helping the merchants to call back the funds that typically used to up to this point go to the banks, right? So do you work with banks at all, or are you simply looking to them as pure competitor and simply looking to replace banks in that part of the value chain per se?
So, by the way, you're not putting me on the spot. It gives me a chance to talk about Tandym, so thank you for that. We think the most useful way in general, whether it's Tandym or outside, is to focus on the customer and the value being created, and then look at where we disagree with whom, right? So to put that in the context of Tandym, we generally believe that merchants are funding big banks' loyalty through interchange rather than funding their own loyalty for their customers so they can increase LTV with their customer base. Which leads to better growth for merchants and also better rewards for customers. To answer your question, we do partner with banks, right? Like as Dharmesh talked about, we do have a banking as a service partner behind the scenes who is completely open-minded about what we're doing and loves what we're doing and is happy to partner with us as well. So the question then becomes like, hey, is the card issuing aspect of a bank, right? Some of the big banks are also big card issuers. They may take offense to, oh my God, like you are going after the interchange revenue, which funds our loyalty. Yes, you should take issue because we disagree with that concept. But there's plenty of other banks and other aspects of the same bank that loves how we're creating a digital wallet of sorts for the customer base with their merchant. So refunds and store credits can easily be issued and seamlessly used by their customer base, which helps the greater ecosystem at large, right? So there is more fluidity of, like right now, payment it's like, hey, you finish your shopping cart and then you go do a payment. We're actually going to create a world where payment is an extension of the merchant brand. So the customer continues the conversation with the merchant, even through the payments, as opposed to today, it stops and then you go pay with your credit card or whomever. So we think we're enabling the greater payment ecosystem, which will help the banks and other players. But as you point out, there are aspects within the banks that may take offense to portions that we are going after.
I love what you said when you said the payment is the extension of the brand. Maybe that's your tagline, right? That's how you make friends with more banks. But that's, to me, it's just very interesting in the angle you're coming from. Now, I want to just talk a little bit. We talk a lot about technology, even though our focus is on customer experience. I think it's no doubt, myself coming from technology background, you really can't talk about banking modernization in whatever context without technology. And banks have to partner with technology companies. So here begs the question, how do banks achieve the balancing act of, in terms of when it comes to technology, what to build, what to borrow, and what to buy? And Dharmesh, I'm going to start with you. See, this is the question I'm posing for everybody.
Yeah, I mean, it's pretty straightforward. I used to run technology strategy and architecture for NatWest, and as part of choosing the technology, you only really build stuff that provides competitive edge or market differentiation. Everything else, if you think about anti-money laundering, well, banks don't compete on anti-money laundering. They just have to do it. So if it's not really competitive, then you shouldn't really build it, especially if you can buy it off the shelf. And that's, pretty straightforward decision. Borrow, I guess, is this providing as a service? I mean, I think, I'm not sure what you mean by borrow, but the build and buy decision is pretty straightforward. I think most people would have thought that core banking was core, central to a bank, and therefore they have to build it. But actually, if you look at the level of product innovation in the last 20 years, it's central to them running the bank, but it's not necessarily central in terms of differentiation, because now you can buy these core solutions that are much more flexible than the bank has. So why would you build one? Yeah. And I think that's a new dynamic.
Yeah. When I was thinking about borrow and buy, when it comes to borrow, I was more thinking about partnering, right? As a SaaS
Partnering, yes. Okay.
technology as a vendor, and buy, I was more thinking about acquisition, right? Just buying the actual.
Oh, yeah. Okay. So, yeah, I mean, banks shouldn't own technology, so that you shouldn't buy it outright, a technology company outright. But definitely, the path now is to borrow, as in, take it as a service, especially as, we're not really seeing product innovation from banks at the moment.
Barry.
It was a necessity in the past when they didn't have the options of borrowing,
Right, yeah. Barry, what about you? What's your thoughts there?
Well, we're founded on the principle that the world's best banks should own and build the products again, and not outsource it to legacy vendors to run for them. And, a lack of innovation in financial services has been because two reasons: either the banks outsource, to a third party to run their core business, loans or deposits, various platforms. And that's not really working because you're beholden on the provider then to innovate, and that requires them custom building something for you, and it takes forever, which is one of the reasons why banks have been so slow to the installment loan market, for example, because it's quite a complex product and they've been reliant on vendors to build it. Or the second reason is their code is so old that nobody knows how to build on their financial products anymore. They're either retired or they're struggling to find new engineers who'd ever want to work in that legacy code. So we believe, if they select Vault, they not only get access to world-class technology, but then talent, really strong engineering talent, will help them build, the world's best products and services on that technology, will be attracted to work in banking again. So we strongly believe that banks taking control of financial product build again is paramount to them. So we lean a little more to build and partnering with the world's best banks to help them do that. That's kind of why Thought Machine was founded.
Sairam?
I agree with all the comments. I think I would it's hard to answer this without going a step, ahead of it and saying, what is your strategy? What are you trying to accomplish? And if the reality is, if you just take a 10-year outlook, 5-year outlook, whatever it is, you're going to have a bunch of customers that are your existing customers, and they're going to have more needs. And then you want to go and grow and acquire new customers. So now the next question becomes what enables you to do both of those things, right? Could you actually keep up? Do you want to invest in that direction? In which case you may want to build, do the transformations, partner with the thought machines and the likes, and go build that organizational agility. Or it's totally okay to say, hey, it's going to be really hard to compete with the Tandyms of the world. How do we power Tandyms of the world, as opposed to trying to go and replicate that functionality and keep up? So I think, the question that needs to precede is, what are you trying to achieve? Of course, there is a level of debt that you need to eliminate. There's a level of transformation, agility you need to create. But beyond that, I would ask the question, what is the goal and what is the best way of doing it?
Thank you. Now we have 7 minutes left. So with the remaining time left, I'd like to do just a lightning round and ask each of the panelists to give us the forward-looking view in the context of modern banking experience. My question here is, everything we talk about today, do you see that something we're only at the cusp of exploring as an industry as a whole in terms of open finance, embedded finance? Is it pretty much still going to dominate the agenda for the banks or the industry in the foreseeable future, 5 years, 10 years? Or do we really need to look at even more beyond for banking in the metaverse? I don't know anything much about it. I keep reading about it as a buzzwords around. Is it really something that we think we have to focus on, or are we talking about let's focus on open finance, embedded finance, focusing on customer, leveraging these trends, leveraging the technology, and really help to enhance, bring in the modern banking experience to a different level? So Sairam, since I have you on the screen right here, I'm going to start with you, just get your thoughts.
I don't know how to react given that Dharmesh has always gone first, but listen, I mean, like we're at the cusp of things. We didn't even get a chance to talk about some of the DeFi and Web3 stuff that's happening. I read on Twitter the other day, which made me laugh, but I also think it's true. Some of the smartest and the dumbest people I know are in Web3. So I don't know. So make with it what you may have, but I think the concepts are here to stay. My underlying assumption is customers are going to be the winners. So the question then is, who is going to create that value proposition for customers to continue winning? I think it's the ecosystem, it's the fintechs, it's the banks, it's all of the above. It's going to be DeFi. So the question is, what value do you want to play in that ecosystem, and how deep you want to go? Do you want to go broad, deep, all that stuff? But I think we're on the cusp of all of these things.
Thank you. Web3, I'm going to have to educate myself a little more about that. Dharmesh, you next.
This was the one question I wanted to go first. No, I'm joking. But yeah, I think Sairam got it absolutely spot on. I was involved in launching some of the very first banks online in 96, 97. And at that point, you had to buy, a £1,000 computer. You had a very poor landline to connect to the internet. And, banks were saying, well, who's going to do that? And they were right, actually, because actually innovation always comes faster than mass adoption. And that's the problem. Sometimes we kind of crave innovation. But actually, the problem with it is that even when we deliver it, right, that to get mass adoptance, right, takes many more years, like 10 to 15 years. So, there has been some backlash on open banking because it's like, well, not enough people are using it. Well, there's over 1 million people using it in the UK, which isn't enough, right? They want, the mass adoptance, 20, 30 million, right, using it, but that will take some time, right? So I think the open banking, open finance space is very early on, but it's moving much faster than some of the other technology trends that we've seen with things like the internet and then the mobile revolution. What I think in the future, stuff to keep an eye on, I totally agree with Sairam, Web 3.0. Whether you take part in the actual cryptos like Ethereum, Bitcoin is irrelevant, right? The whole idea of a decentralized system, is something that banks need to get to grips with. And, at the end of the day, if the customer wants crypto, then, I'd be a fool not to provide it.
Thank you.
And as for the metaverse, I've been there with Second Life, and this is maybe the second coming of Second Life, but I still think there's a long way to go before it gets to mass adoptance.
I love the Second Life reference. Barry?
Well, I've been in the sort of financial service industry my whole career and technology within it. I was a big proponent early on, helping clients, adopt mobile payments to serve customers. And I was increasingly frustrated by how slow mobile payment acceptance was with the banks to serve that to their customers. But in reality, it's actually taken quite a while for the customers to adopt it. So I think Dharmesh and Sairam said it right. And the customer decides, right, what happens next. Now, I'm not sold on the metaverse, but for me, it's just another space where banks may or may not serve customers if they're present. And so, I think innovation at the channel level of banks, I think they were offering products, services, experiences on social media channels, Facebook, WhatsApp, to, offer and try and serve customers because they were very present on those channels. So I think banks will always have to spend R&D money, investment, and technology to understand how to serve customers where they are. So I think by just investing in your technology as a bank, being able to serve them in spaces where they are active, not necessarily having them come to your branch or your own digital property, is a trend that will always be there. But for me, I'm a little conservative, so I'm not all in on crypto myself. And I believe that I like to keep my money with a bank, and I want the bank to keep that securely for me and permission it where I need, so that, you know, other people can, through open banking, can get access to my financial health, etc., and connect to me. But I'm a pretty conservative guy, so I'm not all in on the metaverse, as I said, or crypto right now.
It seems that we have some consensus. No metaverse yet, no crypto yet. Okay. Thank you.
I didn't say that,
by the way. I'd say the other two are well into crypto. They're just not telling us.
Not yet. Well, thank you, Dharmesh. Thank you, Sairam, and thank you, Barry. I really enjoyed the conversation. I find it exhilarating, and I know you're all busy, so we really very much appreciate your time. And thank you, our audience. And I hope you have enjoyed it, find it educational, informative, as much as I do, and will join us again. And bye now, and see you again on the screen. You will see upcoming sessions, and we hope to see you in the near future. And if you can stay on for a few seconds for a very brief survey, we'd very much appreciate your feedback. Thank you. Bye-bye.
Thank you.